Hey, welcome back to Two Stupid Guys Try Stocks. I'm Dylan.
And I'm Vinny. And today we're going to talk about Alibaba, a stock near and dear to both of our hearts, as long as with our patron Saint Michael Burry. We're going to talk about their most recent quarterly earnings that came out this week, what was good, what was bad, and what looks like hot garbage for the next year. We're going to get to it.
Two Stupid Guys Trade Stocks.
It has
Hot
been
garbage.
absolutely brutal being an Alibaba shareholder for the last couple of years. Like boy in the striped pajamas level of like discomfort over the last
Oh
year.
man.
Yeah, a
Oh, I
little
wonder
harsh there.
who's read that book because that's a
Yeah.
that's a good comparison. Okay.
Well, I don't know about that, but Burry's still holding 50,000 shares of the last time that we actually had a quarterly report from him. Jack Ma actually finally bought a little bit more in the last quarter. That popped the stock slightly. But when we look at the 5-day chart here of what happening with earnings, do you think the market really appreciated what they had to say? That vertical line down says probably not.
It's just been hanging in this range of like 68 to 75 for like a crazy long time. I have 350 shares. I am not like Vinny though. I will not sell covered calls against this stock just because it just has a history of
Yeah.
jumping 15% in one day. So just.
It does indeed. Actually, you know what? It might be worthwhile doing, going back over the last couple of years of my covered call trades and looking at them in terms of whether or not it was a good idea retrospectively. We can
Yeah.
do that as a separate video. So, as far as management comments about the most recent quarter, we delivered a solid quarter. We had a little bit of top line growth, 5%. That they did kind of the major headline thing from I guess, a shareholder value perspective is they upsized their share buyback of $25 billion, now $35 billion totally approved. Their comments are a little interesting. I'll get to it more when I talk about what I gleaned from the conference call, but I want to go through some slides here about some of the number highlights first. So, like I said, revenue up 5% year over year. Not great, not horrible. I mean, if you watch any other YouTube videos about the Chinese economy as a whole, kind of not surprised it's still a struggle for them to grow too well during this time
Yeah,
period. So I don't know.
I know, but
Yeah.
they're in an entire real estate crisis on a scale that is way worse than 2008, and they're still having 5% year over year growth. I think that's great. I don't see the problem here.
At what expense, though? That's the real question here, too, when we're talking about growth. Because if you look at these other numbers, income from operations was down. This net income attributable to ordinary shareholders down massively. Uh,
Yeah.
Even when you get down to diluted earnings per share after their share buybacks, still down. And then cash flow also down negative 31%. He's hiding behind you there. So they've
Oh, I
been
didn't see that.
managing to continue growth at 5% despite absolutely crushing themselves in their own margins, which is not a great thing to like to see. We're going to talk a little bit more about that as we get further to segments analysis here. All right. So when you look at each segment within Alibaba, this is their year-over-year growth for the most recent quarter. Most of their revenue comes from these top couple right here, right? Taobao, Tmall, they put it in one. What you're talking about, 127 billion RMB last year to the 129, only 2% year-over-year growth. And then the cloud intelligence, which this has been like the absolute poster child of lackluster performance over the last couple of years,
Mm-hmm.
only a 3% revenue growth. Their other smaller segments, which contribute much less in terms of revenue, have had pretty substantial growth in like the mid-teens or solid double-digit territory. Right? So those are all good things. However, as I wanted to highlight here, net income has come down considerably from last year. Now, a lot of that was due to a pretty large investment kind of profit they showed last year in their third quarter, calendar fourth quarter. Um, so they had a pretty tough comparison there. So I'll be a little bit gentle with that, but still very suspicious, if you will.
Yeah, never like to see parentheses and then a large number in there. That's 77's pretty big. All right.
Yeah, yeah, and you see the same thing here, like we were talking about this year-over-year decrease in income, this 36% decrease in income from operations. As far as this investment income last year, you're looking at the 15.5 billion RMB in a profit. This year swung to a negative 3.5 billion. So that was definitely a bit of a headwind. They had to deal with this massive kind of investment income last year that this year is a deficit or loss. The other issue that really kind of dragged down their profitability There's this impairments of goodwill and other expenses, as well as amortization. If you look at that, 5.5 to 14.6, and then the impairment of goodwill went from 3.9 to 11.1. So those are non-cash charges. Okay, so profit loss on paper, and certainly it bodes poorly for their ability to allocate capital. But we've kind of known that about Alibaba for a while, right? They've been having return on invested capital down in like the single digit percentage for a while.
Mm-hmm.
They actually
Long
even
time.
talked about in the conference call here too. Now, as far as positive highlights, these are always the nice things about Alibaba. This is, you're looking at cash flow statement. Most recent quarter, free cash flow, $7.9 billion, US dollars, 7.9 billion, most recent quarter.
Okay.
That's actually their highest quarter all of last year, right?
Yep.
By like a decent margin. I think the next closest was 6.2 billion. I'm looking down at my notes here. So you're talking about a considerable jump up there in terms of free cash flow for the quarter. As far as their net cash position, which has always been another darling highlight of them, they're sitting at $68.5 billion in positive net cash. Yeah.
I mean, yeah, that's a lot. And they have 25 billion set aside for share buybacks.
Yeah, 35 billion authorized actually over the next
Okay.
3 years.
Got it.
Really, I'm trying to get to the conference call notes because that's where I want to talk a little bit more about some different aspects of their future potential here. This is just highlighting the company-wide margins are staying relatively flat. They're not letting anything get completely out of control as far as spending more in a certain areas, but not seeing any improvement either. Not that we expect to. Now, as far as the actual EBITDA, this is a little bit of a problem here. Okay, so EBITDA, remember Charlie Munger bullshit earnings, right?
Mm-hmm.
RIP, man. It's a good proxy for how profitable each of these business segments are. And if you notice this particular one here, massive growth, Alibaba International Digital Commerce, 44% growth, but the negative 388%. So they got far more unprofitable in the most recent quarter. This is a direct question you're going to see in the conference call thing we'll talk about here in a second as
Oh
well.
boy.
As far as their other units, it is actually kind of nice that they have a positive, EBITDA from a good portion of their businesses now. Obviously, KNow is now positive. You have Cloud that's positive. You have Taiwan, Tmall, all positive on EBITDA basis, which is a nice thing to see. I'm happy about that. They're minimizing their losses in these other segments. When I went to the unit by unit breakdown here, this in general was my thought about the Taiwan Tmall segment, which is their largest one, was that it was a meh quarter. Okay. The number of transactions increased, they said. I don't think they actually gave a number for that, but the total revenue was barely up like at 2%. Right? So they're getting smaller orders more frequently rather than having the order size stay the same.
Okay.
So it's more points of contact with consumers, which is another good thing. Keeps you in the ecosystem, right? Like a little Amazon-esque. Even if you're not making money now, you're going to continue to make money. They did have a little bit of kind of good news as far as their 88 VIP numbers that continue to grow. They said that in the double-digit territory. So they're getting that kind of more affluent consumer continuing to be more and more entrenched in their ecosystem, which is a great thing long term.
But just to be clear, you would expect less large purchases in an economy such as theirs right now. I don't think that's
Yeah.
Alibaba specific. That's
No.
probably all of them. I would assume.
Yeah.
I don't know, but
Yeah, exactly. You're racing towards the bottom, right? Your people are having to be a little bit more frugal with what they spend their money on. Therefore, you're competing over price a little bit more, and you're selling more daily essentials, which typically are things that don't have big fat profit margins. Right? The Alibaba Cloud thing. This is probably for my time of individually owning stocks and following companies along, one of the biggest whiffs I think I've ever seen. For the last few years, remember they put out a conference deck slide and they talked about how the Chinese cloud sector was expected to have a CAGR of 37% year over year for the next 5 years through 2026.
I
And
do.
here we
We
are.
did that video like 8 months ago or something like that, or like a year
Yeah.
ago. It's not even
Oh wow.
close. It's
Yeah, not
horrible.
even close. Yeah, you're looking at 3%. That's up from where it was 2% before. It's just
Yeah.
absolutely anemic. And management, obviously, I completely missed the boat on the size of the market growth, or been completely impotent in their ability to capitalize on that. I know it's your favorite word. Uh, um,
I have
as
another
far as
kid
the
coming, not me.
yeah, I love it. Well, I didn't mean it in that way. Just as a funny word. But from a Alibaba International, all right. So This is the segment that had 44% top line growth, but was much more negative in EBITDA. They did talk a little bit about why that was the case, and that they launched a new product. I'm trying to see what's on here. It was by Choice, Alibaba Choice, and it had pretty significant growth, right? So 60% year over year growth in that particular segment. That is a quote unquote earlier business in terms of its development. Therefore, it's even more unprofitable. Okay, so they had massive growth within like their earliest phase businesses, but they think that this has much better long-term potential. So they're going to continue to invest in this and have probably the losses even widen further here. So this is kind of where I'm getting to that point where this is stuff that the Alibaba shareholders are not going to love for the next year, is that you're going to see this Alibaba Choice, AliExpress Choice, become a larger portion of their business, and it's a net loss on an individual item. For now, he's like, we'll have eventually economies of scale within this, but it's going to be a kind of a real headwind going forward.
As if there isn't already a bunch of headwinds. Dope. Cool.
Yeah.
Sweet.
Yeah. So, Alibaba is very funny too when we go through these slides, right? Like I put green arrows on things that I like, yellow arrows on things that and then red arrows on things that are bad. Anytime we're talking about future growth or profitability, you just like load it with red arrows. But when we look at anything that has to do with cash flow, it's just green arrows
great.
everywhere. That's
Yeah.
just a general trend of Alibaba, right?
I'm waiting for. I'm assuming your last slide has your cash flow number.
Yeah, it does.
Yeah.
As far as share buybacks, this is what they're trying to do: return money to shareholders. They did buy back 3.3% of the outstanding shares in the last year. So you own 350 shares of Alibaba, you said. So in essence, you received another 12 shares free of charge.
370. I bought 20 more.
Yeah. Oh, I like it. That's aggressive. But it's nice to think that every 100 shares you own, you basically received another 3.3 shares in your actual ownership position of Alibaba over the last year. Cool.
Yes and no. Yes, in the fact that I get your math. No, in the fact that usually when that happens, the share price goes up.
I know.
So
I know. It really highlights just how disfavored Alibaba is, despite the fact that they themselves bought back 3% of the company. The stock still had a down year.
Yeah, well, I will say though, it's not just Alibaba. I have a little like a list of Chinese stocks. They're all doing terrible. Like they're all doing really, really bad. And I think until this real estate thing, which I have I have to look more into it. It seems terrifying. Until that's fixed, which could be a while, they need to tread water and stay with healthy margins and healthy cash on hand would be the goal.
Agreed and understood. You are starting to see the effects of these share buybacks. People talked about how, despite their spending all this money, billions of dollars on share buybacks, their stock-based comp was still outpacing it, and they had share growth. It's not true. This is from Macro Trends. This is updated as the most recent quarter. So we have had a continued downward trend over the last couple of years, basically, of Alibaba shares outstanding because of these share repurchases. All right, so we're starting to see positive momentum in that direction. All right, this is where we get to the conference call notes. All right, their kind of plan going forward is going to be focusing on growth, and it seems like that's going to be to the detriment potentially of short-term profits a little bit. But they're going to be trying to aggressively invest in things like this AliExpress Choice. All right, they're investing in the user experience, which they needs to be invested in because every time I try to go to an Alibaba website, I'm just like, what is this crap? Like, I can't find what I'm looking for. It's just like hard to navigate. And that is something that I think they really need to, make a better process. Right. So I'm okay with them investing in this. All right. They are targeting a 3% share repurchase buyback for the next 3 years. Right. That $35 billion, they're going to parse it out as approximately $12 billion per year in share repurchases. Right. They're hoping to improve on the return on invested capital by divesting non-core businesses. They said that over the last year, they sold $1.75 billion in non-core businesses. And this is even a longer-term goal here of exiting physical retail entirely. Remember that they bought like Sun Art, the big grocery store kind of mirroring Amazon's purchase of Whole Foods.
Mm-hmm.
Yeah. So it seems like they want to backpedal on that now, which is probably wise from a shareholder value, profit margins, growth thought process. So they're
Yeah.
going to try to step back from physical retail over the next few years.
Anytime you can have something that's more automated, that'd be great. I'm not. Here's my iffy thing. If
Uh-huh.
in a perfect world, if Meta went down to $100 a share, Zuckerberg would probably use all of his approved share buyback numbers immediately and just buy back as many shares as possible.
Hmm.
This seems like an insanely low price. They were like 360 like 2 years ago or whatever.
Yeah.
We're at 70. I
Yep.
would like to see them pull the trigger on like a lot now rather than 3% a year for 3 years.
I agree. I completely agree. I think part of that might be regulatory. That was one of the questions was about how much of your cash is offshore that allow you to like pursue share repurchases versus like onshore. Um, they really didn't give like a specific number, and it's really I don't know enough about the Chinese regulatory environment to tell you what their limits are on share repurchases.
Right.
It does seem like they're tracking about like 40% or so of free cash flow is being used for share repurchases per quarter. Right? They give another way of looking at it that I thought was kind of interesting here on the next page. So that 12 billion per year, it, if you add up this, 12 billion per year, which is like about 3% share repurchases, and the dividend, which was like 1.5% or 1.3%, you're looking at approximately a 4.5% yield just from share repurchases and dividend. So they were like that roughly tracks the 10-year U.S. Treasury right now, but you have the upside of having ownership in a company, and you're being paid, quote unquote, and like I said, in effect of share buybacks and dividend, about 4.5% yield on your money is being paid to you.
Well, also a possible downside on if they invaded Taiwan and this goes to $5. But yeah, I get it.
Yeah, absolutely. And then, this is that kind of last thing we talked about, the widening investment AIDC. Going to continue to see that from the AliExpress choice growth. And then also they had some increased spending on marketing and, investment in the Middle East, which is, I don't know, from an American perspective, seems like good luck with that money, but that's just me. And then here's the final
Oh,
thing that
Jesus.
I was asking about. So, we just did a video on Meta and Google, and we looked at all of them. All of those companies are tracking down like the 2 to 3% territory. Yeah. This is Alibaba, $183 billion market cap as of close on Friday, $68.6 billion net positive net cash, $115 billion enterprise value. And then if you look at the trailing 12 months free cash flow, which is 24.25 billion. And mind you, like I said, this most recent quarter was the largest one by over 2 billion in the last year. All right. It's still a 21% yield on your cash in theory.
The fact that there's 69 billion net cash and 115 billion enterprise values is pretty disgusting. That's, I don't even, that's wild.
Yeah.
All right.
So, okay, this is my interpretation from listening to the conference call and going through these numbers. I don't think this is going to be a good year for them. All right. I strongly suspect that they're going to have lackluster growth at the expense of decreasing margins. They will continue to repurchase shares, but I don't think we're going to see the real fruition of their growth tactics right now until we get into 2025. I think it's going to be a little while still. So that's my thought.
Well, we've also been thinking that BABA was going to be a lot higher than it was, so maybe it's like an opposite thing. So you're calling 2025. This may be the best year BABA has in the last 4. That's the hope. That sounds
Maybe.
great. Don't use
Yeah.
logic.
I'm still thinking it's going to be a lackluster performance this year.
Probably.
I still am positive on the long-term potential of owning Alibaba, so I'm going to keep my shares, but I might be a little bit more aggressive in my
Covered calls.
Selling. So we'll do a separate video on that, and then maybe I can use that as an idea of whether or not it even makes sense to begin with. So
yeah, it's very difficult. All right, guys, let us know what you think. Have a good one.
get the next one.